So I know that whenever looking at your financial statements, it might just seem like a blur, just a bunch of numbers thrown together that you don't really understand. Maybe you do, that's great. But just in case you don't, I wanted to give you some actual numbers to compare, some ratios to look at to help you get a better understanding of where your business stands. So let's do that by coming over here to the reports on the left. And let's start with the balance sheet because the first one that I want to show you is called the current ratio. So basically, this one compares your current assets to your current liabilities. So if I just close up this balance sheet, you can see once it's all closed up, it's pretty simple. Assets always equals liabilities and equity. So we have the same number here, which is great. But now we want to actually look at our current assets. And a current asset is anything that can be converted to cash within 1 year or one operating cycle. So if we scroll down and we see our current assets, 9,941 compared to our total current liabilities. So there it is, total current liabilities, 6,131. So I actually have the calculator here. Let's just pull this one up. And we can take this number, 9,041 divided by total current liabilities. There's 6,131, giving us a ratio of 1.6, which is good. We want a ratio of at least 1 because it shows us that in case any unexpected bills come up, any unexpected liabilities show up, we have enough potential cash on hand to cover that. It's McAfee. I'm getting sick of McAfee every time. But yeah, so that just shows you that you have enough cash on hand to cover any mishaps, anything that can pop up in the future, which is great, ensuring your safety. The next thing I want to cover is actually called the asset turnover ratio. So it compares our total income to our total assets. So let's just look at our total income slash revenue. QuickBooks calls it income, but let's just call it income. In this case, it could be referred to as revenue as well, as I mentioned, but we have 10,200 as our total revenue. And then if we go to our balance sheet, we want to look at our total assets, which we saw previously was 23,436. So let's just pull that up on our calculator. I'm going to just type in 10,200 divided by 23,436. Oh, sorry, 436. Okay. And that gives us a ratio of 0.43. So this is okay. We want this ratio to be as high as possible because it shows us that compared to our assets, we're using them very effectively in terms of our net income. We're producing a lot of net income for the assets we have on hand, which is a great sign. So try to get this number as high as possible. That could be anything with reinvesting into more efficient equipment, newer equipment that can help you get the job done faster, that sort of thing, and that can help you boost that ratio as well. So the final ratio that I wanted to talk about is the net profit margin ratio, and that'll come from our profit and loss statement. So if we come over here, we can scroll all the way down. That's what the owners, such as myself, we're always looking at the bottom line. Obviously, we're comparing that to the revenue in this case, because what we're going to do is take this net income and divide that by the total income. So what was that? 1,642. 1,642 divided by 10,200, which is a net profit ratio of 0.16. And this basically just shows us how effectively are we using the income that we get to pay for cost of services, cost of goods, any other expenses that might show up. So if this ratio is pretty low, obviously we want this to be as high as possible because that means our net profit is also going to be as high as possible. But to improve this ratio, you can either mark up your prices to help get the discrepancy between your expenses and your total profit, get that increased in your favor, or also you can find ways to reduce your expenses. Specifically, if you scroll down here and you look at your various expenses, maybe you see we shouldn't be spending X amount of dollars on this specific expense. So that can help you obviously cut cost and increase that ratio as well. So great to have a high ratio in that instance as well, specifically because obviously the more profit you're bringing in, the better. But yeah, I hope these couple numbers and ratios helped you get a better understanding of your financials. And thank you so much for watching.